Good morning. Welcome to IG's early morning call. It is Tuesday, the 5th of March. Let's take a look at the headlines as we await what looks to be a lower start across the European equity markets on the session in today's trade. We're continuing to monitor what's happening with the National People's Congress coming out of China. Ambitious targets for growth set around 5%, but the company is flagging some interesting issues that the economy faces. They have a CPI growth target around 3%. Take a look as well at what's happening here in the UK. We've got the British Retail Consortium out with figures out overnight showing that consumer spending is on the way down once again in the month of February. Households remaining cautious. Interest rates have yet to fall, but hopes are that interest rates could come down in the summer. And we continue to monitor what's happening with gold. Also Bitcoin. The precious metal rising very close to that peak we saw at the back end of 2023. The market awaiting testimony this week from Jerome Powell, the Federal Reserve Chief. Also the jobs report as well in the US, helping the markets believe that the Fed is going to be fairly good in terms of its promise on cutting interest rates this year. Well, let's take a look at what's happening with volatility. We're up today, but it is just off the recent lows. This idea of the higher lows has been, I won't say blown out of the market, but that lower low that we had there on the 1st of March, indicating a level not seen since the 9th of February, took a little bit of wind out of the technical sales at least, but we've got this slight rising market in the market at the moment, and that sort of goes hand in hand with what we're seeing on the equity markets in the session today. If we close at these levels on the FTSE 100 with the lowest close we've seen since mid-Feb, 76.03, really equities in this country are absolutely out of favor compared to other markets. Yes, other markets are down today. Second day in a row for the German DAX, but we're away from those record highs we saw at the back end of last week at 17,816. And the story is well told over the last 3 or 4 weeks or so with these new record highs upon record highs on the German DAX. French CAC 40, same sort of price action we're seeing as we see on the German markets, not too far away from recent record highs, 79.34. We never did quite get to that 8,000 in the most recent move up, but this is only just a little bit of consolidation, as many hoping that we're going to see further higher highs, and that depending very much as well on what's likely to happen with things such as interest rates. And some analysts suggesting and economists suggesting that actually the European Central Bank has more capacity to cut interest rates as we go into the summer months than the Fed, but both hoping to see rates down by possibly June in both the Fed and the European Central Bank. Big question is will the Bank of England march along the same path and cut rates as early as that, or August, as some had been expecting? Let's take a look at what's been happening in the Asia-Pacific markets. Gains with the Japanese markets in the session in today's trade for much of the trading day, and then all of a sudden, the back end of the session came a little bit of a sell-off, ending down on the trading day. Hang Seng Stock Index down 2.5%, I think really underscoring the concerns about the Chinese economy that's been seen in the National People's Congress that we've seen the commentary out today. S&P ASX 200 on the way down, but not by a massive margin on the session in today's trade. Some of those stocks benefiting from that rise in the price of gold. Yesterday, we saw another new all-time record high for the NASDAQ on Wall Street. That was the only market that saw gains on the session yesterday. In fact, ending down, actually, that was an interesting market move. I was looking at the 24-hour markets. I just want to show you what happened in yesterday's trade, because at one point yesterday, we did march up to an all-time record high at 18,342. And as I said, this was the only market where we saw appreciable gains at one point, and then came a sell-off with that market down on the cash trading day yesterday, my margin of 0.4%. And we've got another red candle on the way down in the session in today's trade. We've got Target out with numbers a little bit later on today, the retailer out before the bell today. It's unlikely to stir, even if it's a really good number, it's unlikely to stir these markets any higher. But again, like we've seen across much of Europe, this is just a small retracement in what is otherwise a market where we're seeing some relatively healthy gains, and this market expected potentially to continue to see gains, that rising line of support there that we got for the S&P 500. We've seen some interesting data out overnight in Tokyo for the CPI data. We saw the CPI numbers out last week for the nation as a whole. In today's trade, it's the Tokyo CPI. Core consumer prices in Tokyo considered as an advanced indicator for national data, rising 2.5% in February from this time last year, following a 1.8% rise in the prior month, and in line with market expectations let me show you what's happening with the dollar yen trade on the session today's trade. We're holding on to the gains that we saw on Monday. And I want to show you what's going on the Japanese markets, because as we've seen there, that Nikkei turning down on the cash session, but in fact, it is a green candle at the moment. And in fact, we saw, remember, on Monday, we saw that record high at 40,350. Here we are now trading 107 points above the 40,000. Again, like a lot of these markets, this is a market which seems to want to tend higher. This rising line of support, the rising higher lows, and the record highs. We see a continuation. I'd want to see a drop below this sort of area down here to convince me it's anything other than just a retracement in this market move there at the moment. Talking about economic data, we've seen some British Retail Consortium figures out for the month of February. January numbers showing consumer spending slowing in the UK. The February like-for-like sales rising 1%, but slowing from a 1.4% increase in January, below forecast of 1.6%. The survey said that bad weather kept shoppers at home, but also shows households remain cautious about spending in the face of higher borrowing costs and inflation. I'm going to show you what's happening with sterling. This is both sterling against the US dollar and also same sort of price action against the euro. We're down in the session today. Spring budget, of course, tomorrow, the cuts in national insurance, social security contributions that came into effect in January did little to encourage consumer spending. The Chancellor, Jeremy Hunt, had said these cuts would help put more money in people's pockets. Big question is he going to try and do that again or more of it tomorrow with the budget? But the budget is widely seen by many. It's just a showcase for their election bid, which looks like it could be a little bit of a waste of time, given the polls with the Conservatives at recent lows. Take a look at what's happening in some more detail about what's going on in the Chinese economy, because I think this is one of the big centerpieces of the markets at the moment. The Caixin Services global S&P PMI data out today edged down from to 52.5 from 52.7 in January. Still remains comfortably above the 50 mark. In other words, expansion for a 14th straight month. Like the manufacturing sector, the survey contrasts with the official NBS survey released last week, which showed services activity expanded at a faster rate. I want to show you what's going on with the US dollar against the CNH, which is the offshore Chinese yuan. You can see that we're getting to this pinpoint here on what is a fairly shallow symmetrical triangle base that we've got rising there. You can see that's coming in there. So I say fairly shallow. It's due to complete by this point here, which is the 12th of March. We've got to get a breakout. But it is beginning to be a very narrow trading pattern that's been seen. We've seen the Chinese economy struggling since COVID hit by the property crisis, affected by weak consumer spending and the contraction of manufacturing activity. This chart here that I've got in front of me shows this is the dollar on the whole rising against that weaker Chinese yuan. To boost demand, Chinese policymakers have rolled out several measures over the last year or so. Overnight, the authorities announced more at the National People's Congress. Plans 1 trillion yuan of ultra-long special government bonds and 3.9 trillion yuan of new special local government bonds to try and help stimulate the economy. The NPC also set GDP growth targets of around about 5% in 2024, a CPI growth target around 3%, and plans budget deficits at 3% on GDP. So we've got all that news coming through from the National People's Congress in China. We've seen no move on the Chinese foreign exchange in today's session. But I think one interesting aspect to come out of this is that the Chinese authorities have now increased their defense spending to 7.2% of GDP. This is the biggest rise in 5 years. I think that just goes to show the determination that Chinese authorities have in trying to make sure that they continue to underpin and fully endorse the idea that they want to continue to keep on top of defense spending and defending what they believe to be their territories. Of course, I'm talking here about what's happening in Taiwan. Now, at 10 o'clock this morning, we get producer prices out here in the European Eurozone markets expected for the month of January for a 0.4% rise month to month, a 7.4% drop year. Before I show you what's going on the foreign exchange markets, just want to quickly remind you as well, we've got some US data later on today for ISM services. PMI data forecast at 53 in February, down from the 53.4% in the prior months. Factory orders as well coming out this afternoon. Expected to fall by 2.8% in January, month on month, after a 0.2% rise in December. I don't think there's any data out today which is likely to stir any particular move on the euro-dollar trade. I want to show you what's happening with the euro-dollar, 108.45. We are currently trading ahead of the JOLTS report in the States. We're currently trading ahead of ADP and the European Central Bank interest rate decision on Thursday. And then on Friday, we've got non-farm payrolls as well. So there's a lot of economic data out this week where we are expected to see potentially some moves in the euro-dollar trade. And it's mostly backed by what's happening in the US. Add to this the testimony by Jerome Powell on Wednesday and Thursday to Congress. And his trip to the Hill is likely to see the Fed chief underscoring his willingness to cut interest rates, but nonetheless subject to the data that is incoming at the moment. Now, let's move on to what's happening in terms of some of the corporate news headlines. I want to begin, first of all, with one of the big upside potential stock stories this morning. That's Greggs, the high street bakery chain. It's come through with full year numbers. Total sales up 19.6%, like-for-like sales. Company managed shops up 13.7% year over year. Total sales 1.81 billion. This is 1.5 billion this time last year. Pre-tax profit 188.3 million. That's up from last year's 148 million. The cash on the balance sheet 195 million, supporting a special dividend of 40 pence a share, added to the 62 pence ordinary dividend for the full year. The company has said it's seen a record 220 shop openings in 2023 and 75 closures, growing the estate to 2,473 shops as of the end of December. Look at the share price chart. We're not at the record highs that we've seen at 34.42, which were the highs we saw back in December 2021, the company the COVID lows. But nonetheless, it's traveling in the right direction. We've got these higher lows that we've got, which we've seen since the lows we had back in October last year. This high here that we've seen in the last couple of weeks has been the highest print we've seen on the share price since 15th May 2023. So traveling in the right direction. Yesterday, we saw a day of losses. 27.12 is where we're opening this morning. If you're a day trader, stop goes neatly underneath the 2,700 level with a view to taking this up. I think these look particularly good numbers that we've seen from the figures out this morning from Greggs. What is not good are a couple I want to highlight. First of all, Reach, the newspaper publisher, has seen some numbers which, quite frankly, just don't stack up to even where the share price is. Adjusted revenue falling 5.4% to 560.6 million. Operating profit down 9%. Dividend, they're still managing to pay a dividend at 7.34 pence. That is unchanged. I think certainly this is going to be one of the companies worth watching at the start of today's session. Reach trades on the London markets, and you can see here, if you look at the direction of travel, quite clearly it's on the way down. And in fact, let me take you back to the full share price chart. The losses that we've seen recently are knocking on the door of these losses that we've got down here at 50.5 pence. The stock is going to open at 59.4. If we see it disappear below those lows we saw back on the 21st of August 2020, you're then on the way down to levels for this company not seen since the Trinity Miracle back in September 2012. And that is underscoring exactly what's been happening in the sector, newspaper sector. It's really in favor. Doesn't matter what you earn. Most eyeballs go on to online, and those that do go online don't seem to respond to advertising. It's a very difficult market, I think, for Reach at the moment. I want to stay on the charts because I want to bring up a stock price chart of Travis Perkins. TPK is the ticker symbol. Travis Perkins is in all sorts of problems at the moment. Revenue down 2.7% to 4.86 billion. Adjusted operating profit down 39% to 180 million. Look at this share price chart as well, not too far from the recent declines that we've seen. I've drawn this line here, 707, for the lows we had back on the 28th of September 2022. But in fact, we saw a spike lower in the last quarter when we saw the company report last quarterly figures. These look equally as dire. Nick Roberts, the Chief Executive Officer, said ongoing economic challenges have significantly impacted our trading performance, driven by weakness in the new build housing and domestic repairs, maintenance and investment sectors. Although the group delivered overhead savings of 2023 of around 35 million, this is easily offset by the savings being offset by overhead increases, which the company in part wants to try and afford, but it's failing to do so. And people just aren't buying the product. So we're looking potentially for a drop at the start today, 743.3 million. It's the share price open this morning, 707 is the support level for the company. We saw the business come through with numbers, and that's Ashtead. Ashtead has a lot of business in the States, and in fact, it's the US market really pushing this company ahead. It's a business services company. It's come through with 9-month or third quarter earnings. Group revenue up 14%. Revenue for the 3 months up 9%. Adjusted pre-tax profit falling 11% to $473 million. It reports in dollars, despite the fact it's listed in London. It's because a lot of its business is in the US markets. Ashtead has share price where we've seen recent highs. We're not too far away from where we peaked out. Remember that back on the 9th of August 2023 at 57.93. The stock will open this morning at 57.29. Not entirely sure this is a totally up movement story, but the company is doing all it can in what is a bit of a market for the business. If it does break this 57.93, the level's not seen since March 2023. Now in the US, as I said, just one company worth watching today is Target, the retailer, out with numbers, due to report numbers before the market opens. This is what we're looking for. The street expecting earnings of $2.41 per share, which would be a 27.5% increase from the same quarter last year. Revenue thought to rise around about 1.5% to $31.83 billion. So that is one stock worth watching. I want to show you the share price chart for Target, which has seen some interesting gains recently as the stock benefits from an improved picture for some of these consumers. And as we have been hearing, hopes are high that the Fed's going to start delivering on interest rates sometime soon. So interested to see what Target says before the market opens today. It's not an all-session stock, so you won't get a stock market reaction before the bell. But certainly, if it is a good set of numbers, potentially we've got some upside to go for Target. Now, gold is a little changed after some startling gains over the last few days. And in fact, it continues to trade just below the record highs that we saw around about 3 months ago. Gold is one of those interesting areas of the market that responds sometimes to some of the incoming news headlines. And we got some interesting headlines expected this week, which could well end up seeing the Fed being able to cut interest rates come June. Let's take a look at the price chart for gold. These big gains that we've seen. I've drawn this red line here at 21.21, which were the highs that we saw, albeit briefly, on Monday, the 4th of December. And then came that pullback. Another tilt at that in the last couple of days. We peaked out at 2020. And today we've seen another intraday high, which is very, very close to that, but not quite breaking that through. We've got Fed Chair Jerome Powell's 2-day congressional testimony, Wednesday and Thursday. A jobs data heavy week, investors seeking more clues on the health of the US economy and potential timing of the central bank's interest rate cuts. We've got the JOLTS, ADP and NFP numbers out today. That's the price of gold you can see up at the moment. I just wanted to quickly talk about what's happening with silver. Gains, but not at near record highs. And in fact, it's a slightly less than rosy picture, but nonetheless, we've seen some gains today. We are on the way down just by a small margin, broadly speaking, holding on to the rise that we saw in yesterday's trade, which took us to levels not seen since the 2nd of January. So money going in at the moment to precious metals. I just want to quickly update you on what's happening in the markets for cryptos, because this is the other area of the market I think it's worth looking at in terms of the context of what's going on with gold. And if we look at this chart here, Bitcoin is almost to record highs. Those record highs we saw on this chart here back on the 8th of November 2021 at 68,971. In today's session, we've seen it creep ever so close to that record high and then came a little more of a pullback. This rise that we've seen So far, since the lows that we had in Bitcoin back in November 2022, 344% up. Money continues to go into some of the other assets around the world. Staying on the charts, just wanted to update you on what's happening with copper. It's not really a massively important story. We are losing today, but just to show you that the money that's going into gold is not going into base metals, currently trading 8,500 for the price of copper. That's it. Watch out for Travis Perkins. Reach potentially on the way down today. Start today's UK session at the top of the hour. Looking for losses across the board here in the London market at the moment. I think one stock story that could change the face a little bit, and that is a potential upside story for Greggs, which continues to add stores and continues to add profit and revenues onto the overall story for the high street bakery chain. Certainly one of the stocks. Watch the start of today's trade. We're back at 10:30. We're charting the markets.